Today was a really rough day in the markets all around, especially for the meme stock trading crowd. Today was the debut of APE, which is AMC's new equity. It turns out to be just like a stock split. The value of that equity came directly from AMC shares, and so there was this massive drop right at the beginning of trading, and that gap, unfortunately, does not get the same kind of technical analysis that an area gap gets, in that it wasn't created by trading. So that is to say, when shorts or puts drive the price down, when bears take their profits, they actually create upside pressure, and that's what creates bounce and layers of support and resistance. Is a lot of their buying power actually, or those positions closing. We talk about bears and bulls. It's kind of stupid. The label's dumb. Traders should go both ways, really. No one trades one side. I mean, no logical trader only trades one side. I myself at the time, I'm actually not trading AMC or APE. I went ahead and bought one share of each today, kind of in solidarity, because I really feel like people are starting to get scammed, and I'm gonna start using that word. I don't think that there is any truth to the Moaz myth. I'm calling it the Moaz myth machine. Social media is used to create an environment to sell shares of a company or buy shares of a company, and the brokers make a lot of money doing that through payment for order flow. And AMC, now that they're going to be diluting their equity with shares of APE, are going to be able to profit from that as well. And all the while, the value that's being taken from those sales of APE are going to be coming from retail traders. And the value in the payment for order flow that the brokers are making is also coming from the retail trader. And so I think that it's really sad, and it is heartbreaking, because people are starting to lose a lot of value in their accounts, a lot of value. And so from here on out, I'm not going to be buying puts or trading to the downside on AMC or APE. It just feels wrong. It is tragic. I think this is not great. This is dark, and I do believe that I don't want to be any part of contributing to that anymore. So, not that I think that I was. It's just that I don't want to be one of the. I don't want to be involved. Taking myself out of that game. So, as you know, most of my accounts in precious metal equities at the time, and gold is going down right now, and I did see that coming. I think when we start to see fear re-enter the markets in general, that we'll see that decoupling, that correlation, that positive correlation between the gold and equities. So it'll just be a matter of time before that starts to pan out in my favor, I believe. It's been incredible the last couple of weeks looking at my analysis, from calling the top at 2750 in AMC to the fall of Bed Bath & Beyond, and now the rise of the fear index with this sudden dip in SPY and IWM and QQQ. So I've been having a great time just doing the analysis, and I just want to hop right into that. Here we go. Okay, here we go. Market overview, starting with SPY, IWM, VIX, and QQQ. If you watched Friday's video, you know that I was expecting the VIX to climb to this green trend line, and that the markets in response would be heading down. And that is exactly what we see across the board. So SPY is now encountering these levels of support at these Fibonacci retracement levels. The levels themselves don't provide any support. What we're looking for is interaction with those levels. And so this 413.52 level was exceeded, and the price did close below there. So I do think we are looking down for more movement to 408 downside. Not great. You're going to see this max minute wave 4 retracement at 420.76. The price did push up above there and is now being forced downward, and this is a lot of momentum. I think this might be a slingshot heading down, so there's a lot of uncertainty in the markets, and I think that will reflect in VIX as it rises and the markets begin their retracement, consolidation, or dump and run. So we're going to have to wait till the end of the week to really understand the severity of this retracement, or if it is actually a bearish reversal. We don't know yet. Uncertainty abounds. AMC on the daily time frame, you're going to see that there is a huge gap through here, and that's because the value of APE comes directly from AMC. And so this gap doesn't get filled like a normal gap would. In fact, it's more appropriate just to think of this candle being placed higher up here and use that for your analysis. It's not great, I know. And you can't even really just take the price of APE and add it to AMC because those two equities are going to trade separately. I'm not sure how that relationship works. I don't think anyone really does who is pretending that they do. I'm not here to say things that don't make sense, or if I don't know them, or if I don't have good reason to, so I'm not going to try to mislead you. Nonetheless, I do believe if you were to take this candle and place it higher as if APE were not issued, you would see that we've already reached that double top target. Back here at the 2750 high, I called that this looks like a top. And then when this second red candle came in, I said double top, look for the confirmation, and then boom, 2 days later, we've definitely hit the target. Volume is incredibly high. It's higher than it was at 2750. Implied volatility is rising. RSI is dropping hard and fast, and that's because of that gap. So the closing prices are so far apart, and that's why you have such a steep drop in the RSI. It's going to take a long time for the RSI, for the MACD, for the momentum indicators in AMC to reestablish themselves and really make any sense. So it's going to be kind of like flying blind for a while, which is why we do Elliott wave analysis. The gap does make this a little harder. I've actually revised my count a little bit. So here on the 15-minute chart, you can see that I've actually moved the end of wave 3 to this 1765 level, and that this little triangle in here I'm calling wave 4, and I think we're actually seeing now the beginning of wave 5. And actually you can even put wave 4 down here, that this little rise here, that was the end of that corrective bounce. And that corrective bounce I did expect to reach $21. If you do add APE and AMC together, you will see that I did call that level very well, and the price did reject there, and we are continuing the downtrend. And so this is how I'm handling it. I'm saying, hey, I took this downtrend, I just replicated the slope and applied it down here, and you can see it's working out pretty well. This does mean though that AMC is due for a corrective bounce. I think extending the wave count out was good. I'm not really sure how high we're going to go. I'm going to have to do some really thorough analysis to try to understand how the issuance of APE has affected the levels of AMC, and then how I'm going to correlate that into my analysis. AMC on the daily time frame looks bad, looks really bad. A lot of volume towards the beginning of the day, implied volatility going absolutely nuts, falling off towards the end of the day. Volume was high, most of it was selling volume. Ouch. APE, the first day of APE. So here we go. The first analysis is bearish, starting a motive wave down. I said this is going to be subunit wave 1, subunit wave 2, and then 3 is this massive extension. We don't get 4 until the middle of the day, and then 5 finishes it. And we did have a little breakout of that downtrend. I think that's going to be an A, B, and C correction, and we're likely to see the price push back up to this 870 level and test it, and we'll see then whether or not we get some sort of topping pattern like a head and shoulder top, or if we get a pennant that breaks out to the downside or upside. It could go up. I'm not saying that it can't go up. We don't know if APE is going to go to the grave or go to the moon. It's way too early to tell. If anyone tells you they know what's going to happen, guess what? They don't. That's not how the stock market works. If it were, everyone would be millionaires. So that's me, shoot my video. I guess that's all I want to say for today, is that it's getting serious out there. It's getting really serious, and oh man, I am actually worried. If you like the analysis, if you want to subscribe, if you want to get these 45-minute videos of Elliott wave analysis, of SPX, of gold, oil, Bitcoin, I do a lot in my Capivision episodes every Sunday. You can join by hitting join below. It's $1.99 a month, and I think yesterday I really just spent my entire video on SPX and AMC, and I gotta tell you, it's gotta be some of the best analysis I see on YouTube. I am not here to mislead you. I am not here to get you hyped up. I am not here to affirm your bias. If you want some actual analysis, if you value the data and want to interpret the data, you want to learn how to do technical analysis, if you feel like you've been jaded, if you feel like you've been robbed, if you feel like you're losing the fight in the market, this is a loud plane. Join Capivision. That's all I have for now. Happy trading.